In a recent meeting, the central bank governor, Olayemi Cardoso, sparked discussions on the country's economic trajectory. Key topics included the relationship between population growth and economic output, potential growth areas, the impact of subsidy removal, revenue plans, social interventions, and the tightening of monetary policy. Well, let's delve into these issues and explore the challenges and opportunities that lie ahead for the Nigerian economy with Sam Chidoka, the CEO, KAIROS Capital. Thank you, Sam Chidoka, for joining me today.
Thank you for having me. My pleasure being here.
All right. So at a recent breakfast meeting, we heard the central bank governor trying to draw a connection between population growth and output growth, or you might just want to say GDP. I'd like you to talk to us about the dynamics between both.
Well, so there is a correlation between population growth and GDP growth. The Bretton Woods institutions have always recommended that your GDP growth should be much higher than your population growth. So a measure of an economy that is doing well is when, because GDP is the aggregate of goods and services produced in that economy for a particular period, right? So your GDP growth rate should ordinarily be higher than your population growth rate. But in recent past in Nigeria, we've had a situation where our population growth, which is estimated at about 3%, and then our GDP growth has always been lower than that. So if you compare a GDP growth rate of about 2.6, 2.7% to a population growth rate of about 3%, that means we are birthing more people than we are able to feed or we're able to cater for. So again, that's something for managers of our economy to worry about. We should have a situation where our population growth should go back to the days when we used to do, where our GDP growth, should go back to the days when we used to do 5%, 6% per annum. And that way we're growing faster than population. And that way we are more productive as an economy.
All right, so for output growth to exceed population growth, which of course you have also said is a good thing, we have three suggestions, whether we have to increase oil production to 2 million barrels per day. And when we talk about this, I remember, what we just recorded last month, that definitely isn't good enough. And then we also talk about maybe growing the agri sector to 3% as against 2.1% in 2023. And the third thing would be boosting trade activities to support a positive current account. Now, which of these do you think we can achieve in the shortest term, and what are the hindrances really to achieving these?
Unfortunately, I don't think there's any of them we can achieve in the shortest term, because again, a short-term approach to managing the economy is not the best for me. I think that when you manage an economy, you have to do it into a mid to a long-term approach. So for instance, let's take the first one, increasing oil output. Truth be told, we're doing somewhere around 1.2, 1.3 million barrels of oil and condensates per annum. Our OPEC quota has recently been cut because we're not meeting that quota. We're at 1.8 OPEC quota before, but it's been cut recently to about 1.3 because we're not meeting that quota. You need to deal with issues around insecurity. You need to deal with issues around oil theft. Right now, all the acreages that we have in the shallow waters and near and onshore, many of the onshore assets we have are not producing today because of insecurity. It's the deep offshore assets that are really ramping up production. There hasn't been a lot of investments in our oil and gas, mining of new fields and all of that, simply because of insecurity, oil theft, and things like that. So that's not an immediate, to solve that problem, you need to have a mid to a long-term solution to all the bounds of insecurity around that area. The second one is agri-growth. So what we have done so far in agriculture is we haven't quite mechanized agriculture in the levels that we should. If you look at the economies where agriculture is the mainstay, is mechanized agriculture, not subsistent agriculture. Subsistent agriculture will feed you and your family. Mechanized agriculture will feed communities and a nation. So again, we need to make that investment. We have the numbers, but we need to make the investment in mechanizing. You don't just say we have numbers and everybody should carry cutlasses and go into the bush and farm. The output versus the input will not make sense. But if you mechanize, then you can produce more. Again, agriculture is affected by insecurity.
I was coming there, so you just take it up then.
Yeah, because again, insecurity is a problem with agriculture. So all of these things are tied together. We need to fundamentally solve the problem of insecurity in the country. and to help us to begin to boost production and productivity.
All right, I'd like you to talk about boosting trade, really, and how that would also impact on our current account. I'd like you to speak to that. What are the hindrances, really, as we speak?
So again, before you can even trade, you have to produce. What are you trading? You have to be productive to trade. It's on record that many of the cargo aircrafts that come into Nigeria go back empty. Many of the cargo ships that come into Nigeria go back empty because we're not producing. So what are you producing? You are either producing agricultural products that are for export or natural products that are for export. If you look at the whole value chain of our natural products, you will still find insecurity. Whether you're talking about gold mining in Zamfara or cocoa mining in the southwest, or whether it is coal in the southeast, there is, as long as we have this overhang of insecurity, as long as we have the overhang of banditry, we're not able to produce these things and export. Also, we're in a situation where our currency currently enables us to be productive and export-minded. When you have a weak currency, what that drives you to do is to try and get foreign currency. And how do you get foreign currency? By exporting. But you can't produce and export except we begin to take the necessary actions as an economy. And I dare say, the necessary steps to becoming productive, the necessary steps to becoming export-minded are not quick fixes. There is no quick fix. They have to be mid to long term. And so what typically happens in Nigeria is that when a new government comes in, they start a new project altogether. It shouldn't be. We have to first set a mid to long term priority drive, and we have to be consistent with it. We have to deal with insecurity. We have to deal with issues of unemployment. We have to deal with issues of government enhancing those that are in the critical sector of production.
So, Mr. Chidoka, let me come in here.
Yes.
Let me come in here. Do you get the sense that the government, that's the fiscal authority now, is actually, doing all of those things that you have talked about? Are they taking necessary steps to achieve this?
So, on paper and in the news, it sounds like we're taking the necessary steps. Until we begin to see the effect of it, those necessary steps are not working. Until we begin to see the effect. You don't just have to say it, you have to do it, and you have to be consistent with it. You cannot be productive in an economy where you're trying to start a small-scale business that could blossom and become self-sustaining and even export-minded. As soon as you start that business, government comes to you with all various forms of taxation, all various forms of licenses, multiple taxation. You go to the ports, inefficiency at the ports. Some people take perishables to the ports and they perish at the ports. We have to ease of doing business. Everything, there has to be a handshake between the monetary policy framers and the fiscal policy framers for us to get to the necessary place. Now, if another elephant in the room, how do you become productive without power? And there is no quick fix to power. Power is not a shelf item. You don't just go and buy power. You have to invest. So again, kudos to the government. The right pricing of power in Nigeria is the right way to go, because when you right price, the GenCos and the DisCos get paid right, and then they can reinvest. But of course, the national grid is an elephant in that room also. We have to solve that. You solve power problems, you solve insecurity problems, you solve multiple taxation problem, you solve ease of doing business problem. As you begin to bring all of this into a fusion, we'll begin to see productivity and advancement in our economy.
But if I get you correctly, you talked about right pricing. Are you trying to say that you do not have an issue with the hike in the price of electricity? Rather, what you have an issue with is the inefficiency within the system. Is that what you're trying to say?
Absolutely. So we did a recent study to find out which is cheaper. So let's assume that you are on band A. We took an estate in Lagos and did a study of supplying power to that estate. Is an estate that has 100 apartments. Supplying power to 100 apartments using generators and diesel, as against paying 225 naira as band A. The analysis showed that that estate would generate power using diesel at 308 naira per kilowatt hour. Meanwhile, band A is 225. So you're still in a better situation, paying 225 naira per kilowatt hour and getting power for 20 hours. So what needs to happen is that it's a question of the chicken and egg, which one comes first. I think that we needed to right price. Now that we've done the right pricing, in the sooner than later, there will be no excuses. It's now for the discos to make sure they meter Nigerians, make sure people pay for what they consume, reinvest the money they are getting, generate more power, and we are able to reinvent our distribution network, distribute more power. If we are getting the power, I don't think paying for it is the problem. The challenge you have is that people have to pay for what they are not getting, and that itself is a major problem.
I think we're going to try to be very nice here on New Central. Maybe we'll keep our eyes on that story and see what happens in the next 6 months. I mean, we're talking about right pricing now, so we're going to give them some time and see if they are going to live up to the expectation. Nice one right there. Now, isn't it interesting that the CBN governor, boasts of resetting the economy on the back of 2 critical reforms, and one of them being subsidy removal? Now, talking about subsidy removal, this is something that has become controversial, if you ask me. I mean, we had a situation where we've got people, even within the government, come out to say certain things about subsidy, and then we also have MDCO of Rain Oil also coming to say about a certain amount is being paid on subsidy, every month and all of that. So speaking about that, what do we even believe? And truthfully speaking, what do you think is in the best interest of, Nigerians and the Nigerian economy?
That's a mouthful. Okay, let's try and dimension issues and separate them. First of all, I think we're still paying subsidy. I don't have the data. I don't have the facts.
But why is it difficult for government to say it in clear terms that we are doing this, rather than NNPC telling us they are paying full recovery? Or, is it difficult to ask for? Is it a problem?
Look, Perpetua, I can tell you 2 things, and they will mean the same thing. I can say 6, I can say half a dozen. They mean the same thing. So whether you call it under recovery or you call it subsidy, it is a subsidy. Right. Landing costs today from operators in that market, I hear that landing cost is anywhere between 1,200 naira to 1,300 naira per liter of PMS. And in Lagos, if we use Lagos as a proxy, we're buying fuel at 650, 620. So somebody's paying for the differential. That's a subsidy. So in my view, we're paying subsidy.
So which is good for Nigerians and the economy? Continuing this way?
So there is the political angle and there is the economic angle. The economic angle is that such subsidy has to go because it's a consumption subsidy. Fuel is a consumption subsidy, and I do not subscribe to such subsidy. Governments can subsidize the economy. Governments can subsidize the nation. They can subsidize healthcare. You can subsidize education. I do not subscribe to subsidizing consumption. If you, okay, I give you an example. Technology has moved. Today, we're having this interview. I am seated in a different place. You are in a different studio. But by virtue of IT, we can have this interview. There are alternatives to being on the road. There can also be alternatives in terms of gas-driven vehicles. There are alternatives in mass movement, in terms of mass transportation, whether it is by train, by trams, or by buses that move people and do volume discounts because it's moving a lot of people than having vehicles on the way. There are also options for people to choose more efficient vehicles in terms of fuel consumption. So there are options in terms of, but there is no option to healthcare. If somebody is sick and cannot afford healthcare, the person will most likely die.
You know what, Sam? Let me throw this in. The reason we're having this conversation, the reason Nigerians, get excited or even anxious when we talk about anything happening to fuel prices is because power is not reliable. If power was reliable, some of those companies, manufacturers, businesses would not complain so much. Not so many people will really care about PMS selling for maybe 1,000 naira. But the fundamental issue is not being addressed. So do we pay for that?
So again, the big manufacturers do not use PMS. They use diesel. Diesel has been deregulated eons ago.
Absolutely.
So it's not a PMS conversation. They operate with generators and they use diesel. And diesel is already priced at over 1,000 naira per liter. As a matter of fact, we were buying diesel at 1,400 naira before Dangote Refinery came on stream. And with Dangote Refinery today, we are doing about 1,000 naira per liter of diesel. And that is the elephant in the room. It's not a PMS conversation. So when you talk about removing subsidy on PMS, I think it's more a political conversation than an economic conversation. What I believe makes sense in an economic scale is remove the subsidy from PMS and apply it to things that help the economy to become more productive. Only a healthy nation can be productive. When people are sick, when people can't afford basic health care, then they cannot be productive. When people can't go to school and get whether technical or other forms of education, because again, I think on that education leg, sometimes we get it wrong. Everybody doesn't have to go to university. Everybody doesn't have to be a doctor, an engineer, and all of that. Some people have to go to technical schools. Some people have to go to all different types of education. But the point is to make the nation productive. So invest in that. Put a subsidy in education. Don't have the number of pupils out of school at staggering amounts in the Northeast and in the Northwest and in different parts of the nation. We need to reduce all of that. That I will subscribe to subsidy, because if you subsidize those, if people go to school, they will be less prone to crime, they will become productive for themselves and for their family, and ultimately add to the GDP of the nation. If people are healthy, they'll be more productive. But you're subsidizing fuel. How many people actually own the cars? You can use diesel to fund large-scale movements. People can go on trains, invest in that. It's a gradual process, but we can invest. Take the savings from subsidy removal and begin to invest in CNG-driven buses and vehicles. And of course, even with power for those who use diesel, there's also an alternative. You can use other forms of power. There are many companies in Nigeria today that have gone off-grid. But what do you do about healthcare? What do you do about education? You can't go off-grid.
All right, so let's take a look at, CBN's tightening policies. We have CRR at 45%, liquidity ratio 30%, MPR 24.75%. And now just yesterday, we hear that, there is a circular talking about LDR, that's a loan deposit ratio, putting that at 50%. And I wanted to also look at, tie that with the high interest rate we're seeing in the fixed income market. Could you speak to us about the impact this is, or let's say could be having on the real sector?
So the CBN governor has been clear. He's been clear as daylight. He's clear that he is targeting inflation and he's targeting exchange rates. And when you target inflation in an inflationary environment, you tighten. It's economics 101, right? In an inflationary environment, you do your best to tighten instead of being expansive. So everything that the CBN governor has done so far has been headed in that same direction of tightening. So whether it's increasing the MPR to 24%, thereabout where we are today, whether it is asking for further consolidation or improvement in the shareholding of banks, whether it is in the fixed income increase in rates, or whether it is the directive that people can't have FX assets backing Nigerian loans, or this decision now to reduce the loan to deposit rate, which used to be, I think, 65%, thereabout, if I'm correct.
65, yes.
Reduced to 50%, right? So all of this is geared towards reducing liquidity in the market. Also,
we understand what it's geared towards, but I'm talking about, let's look at, how is it affecting the real sector? Is it having any impact on the real sector? Also, I would like you to also tie that to, interventions by fiscal authority, if it's measuring up and all of that.
So unfortunately, inflation, for instance, is a lagging indicator. It's not a forward-looking indicator. So you're going to take the decisions, you're going to change the policies, and wait for a 2 to 3 months period before you begin to see the effect on inflation. However, it's important to note that between January and February, inflation went up by, I think, 1.8%. For March inflation, the rate of increase has slowed down. In March, I think it's a 1.5%.
1.5, yes, compared to 1.8 in February.
Yeah. So you see that what the monetary policy is doing is beginning to have effect. So whilst inflation is still accelerating, it's accelerating in a decelerating mode, if people get what I mean. So
I do.
It's increasing, but at a reducing mode. So on the monetary policy, there's just so much you can do. The monetary policies, monetary instruments are known. The challenge we have is the fiscal side. Is the fiscal side doing enough to tie to what we're doing, what is being done on the monetary policy? I dare say no. I think we're still spending money like it's going out of fashion. I saw recent meeting of some establishment in Nigeria. Nigerians all having a meeting, government establishment, and they had that meeting in London. The question is why? Why do Nigerians fly out to go to London to have a meeting? It's because we do not yet understand the need that on the monetary policy side, we're trying to squeeze and contract the economy. You can't now be spending like it's going out of fashion.
All right.
So the fiscal side has to come to the table and help the monetary policies so that we begin to see the implementation. Also, you can see currency. We have seen Nigerian Naira gain 40%. So
okay. I think that's a bragging right for the CBN and the Monetary Authority in general. Thank you so much, Sam Chidoka, CEO, KAIROS Capital. Thank you for your thoughts and your time on the show today.